So our first speaker is Mr. Patrick Bond, who is an economist, and he's going to talk about the dialects of neoliberal monetary management and social resistance in South Africa. So I'm going to give the word to Mr. Bond.
I did work in the US Federal Reserve, and my boss there, Paul Volcker, he killed more Africans than Cecil Rhodes and King Leopold. Is that right? My boss, Paul Volcker. So this monetary management and mismanagement is terribly important. And all around the world, this is the best moment. I'm not going to talk about Zimbabwe, where there are periodic revolts, and Francis is going to pick this up. But in South Africa, I'll spend just a moment describing what's in the paper in more detail, the characteristics of practical revolts against financial and monetary injustice. In particular, there's revolts that I think we're going to see more from IMF riots, revolts against austerity, revolts against high interest rates and excessive debt loads. So have you been in South Africa? Some of you? And many of you know that because of these conditions that I'll describe, it's been difficult to turn our revolts into national protests. Occasionally it happens against Jacob Zuma. He was thrown out of power a year and a half ago, partly because of grassroots revolts. But it's exciting today, the last few weeks, to find Algeria, Lebanon, to find the Ecuadorians successful in their IMF riots, right? This is a perfect time for us to move the discussion away from the terrain of ideas towards the terrain of protest. And I've just done a survey, I'll send it to anyone interested, in the journal Research in Political Economy, where I've surveyed African, let me call it Africans Uprising, against Africa Rising. Africa Rising, with due respect to our prior presenter, Africa Rising was this terrible myth, right, built on, to some extent, the commodity supercycle, to some extent, liberalization of certain markets in South Africa, credit markets. For us, with some of the detailed data, we get this from a Sussex University database, ACLED. Over time and across space, these protests have really been extraordinary, the protest capital of the world. But if you're African coming to South Africa, most of you are petit bourgeois, is that right? Nobody here in the proletariat, in the lumpen proletariat? I missed you if you are here. You come to South Africa, if you're proletariat, it's very difficult because of xenophobia. I'm very much hoping that you comrades who are petit bourgeois can come in and out of South Africa, get visas easily. But it's an increasingly difficult place. And it became much harder last week because the budget was announced. And the budget with what we call the pseudo monetarist, Tito Mboweni, who was a Reserve Bank governor who kept the interest rates at the world's highest levels in real terms for the major countries. He's now the finance minister. And as one of the key commentators, Peter Montalto, says, it's clear that Treasury attempted to make significant cuts in the budget and then ran into a brick wall. And the brick wall was the trade unions. And so now there's a bruising round of negotiations with the public sector trade unions. But it's not just there that the austerity is gathering in South Africa. It's gathering in especially the municipal and provincial accounts, which is the source of what I just showed you, those protests. We call them service delivery protests. They're going to get more and more intense. I would certainly recommend, if you want the best source of political economic information in South Africa, it's the AIDC, Alternative Information and Development Center, in the magazine Amandla. So we've got a kind of dialectic of resistance that's partly from the Karl Polanyi tradition of the market goes too far and there's a backlash. So some of this is quite easy. It's reformist. It's the standard demands to tax the rich a bit more. And of course, South Africa also has a major problem with illicit financial flows. They're running in the range of $15 to $25 billion a year, according to even the government's latest report. And they're not regulated because of liberalized exchange controls. A more radical approach has been to question the funding that's being used in crony capitalism, especially what I'll come to in a moment is the character of corruption, corporate corruption, not just a petty bourgeois bureaucracy in the state, the classic problem. And these include very high carbon intensive. In fact, even this morning, the Saudis announced a $10 billion new refinery, an oil refinery in South Africa's fourth major port, Richards Bay. But there's 800 billion rand, divide by 15, about $55 billion of committed funds to export 18 billion tons of coal from South Africa, mostly burned by India. This kind of carbon-intensive, minerals, energy complex political economy is what we face. Lots of resistance along the way in these. There's procurement corruption, in which corporations are doing outsourced work, privatized. We call them PPPs, public-private pilfering. Plunder, all right? It's also in the 55, it's sort of in the, well, let's say 35%, 300 billion, it's about $20 billion a year. We're now also waging a war against the financiers of these corrupt carbon-intensive projects. The biggest are the 2 coal-fired power plants. Some of you may have heard that the World Bank made its largest ever loan to Eskom, South Africa's electricity company, which yesterday, yet again, started the load shedding, cutting off the electricity. Because these loans went to, especially the biggest loan the bank ever made, $3.75 billion, to the Medupi power plant that was Hitachi bribing the African National Congress, later admitting it in the Foreign Corrupt Practices Act prosecution. But it wasn't just the World Bank, the European Investment Bank, the African Development Bank, China Development Bank, and the BRICS New Development Bank. So demands to declare this odious debt. Also to lower interest rate, a 3% demand from the South African Federation of Trade Unions. And then much tighter exchange controls. And then seizing some of the export-oriented subsidies, especially the capital-intensive auto industry. And then prescribed assets. These are the sorts of demands and campaigns that you'll find in the progressive circuits of South Africa, with the distinction between reformist and more radical system-challenging kinds of projects. And in the conclusion to the paper, I go through where I feel some of those are bubbling up from the base in the so-called bond boycotts, where collectively communities say, we won't pay our mortgage loans. Or there are now efforts to question the cash transfers that have turned into microfinance on usurious terms by a company called CPS Net One, which was pushed out. What it drives us towards is asking not just what's happening at the base, but where are the ideas? Because Fanon was correct. The great danger that threatens Africa is the absence of ideology. And for Cabral, this total lack of ideology in our political movements is one of the greatest weaknesses in our struggle against imperialism. And to find the roots of a strong ideological approach, an analysis that cuts to the root of the problem, who else for Africans than a German who wrote in 1913 a very strongly anti-racist, anti-sexist, and anti-capitalist perspective, partly drawing on what she learned from South Africa, from Namibia, from the Democratic Republic of the Congo. And the chair in the last session is there, Arndt Hoffman, with Herman Chitongi, and I tried to pull some of those updates on Luxembourg. It's become, quite common. I have a new article this year in the Austrian Journal of Development Studies on where are some of the revivals or creolizations, as some are calling it, of Rosa Luxemburg. I think they come in her analysis of what Prabat was driving at last night, the tendency of capitalism to burst out in crises. Capital can't accumulate in those conditions without non-capitalist relations. The continuous and progressive disintegration of non-capitalist relations makes accumulation possible. And this proceeds at the cost of eating up, capitalists eating up the non-capitalists. The metabolism between capitalism and the pre-capitalist methods leads to the corrosion and assimilation. And we're better than the Southern African zone of the world's worst inequality today, which has been so durable over the centuries since she wrote. And to pick up this tradition, this ideologically sound way of understanding capital and the non-capitalist in this continent, but we should celebrate the life work of Samir Amin, whose name should have been, I think, mentioned a fair bit more often here, because it is his death in August last year was a great loss to these questions of super exploitation, right, of the ways in which unequal value transfers, north-south and within countries, leads to uneven development. South Africa lost also last year our own leading political economist of inequality, Saint-Pierre Blanche. Also last year, our main feminist critic of the articulations of modes of production. And she, Anne-Marie Walpe, and her late husband, Harold Walpe, had developed a kind of Luxemburgist reading of the South African race-class debate in which racism was for many years quite functional to the way capitalism operated. To turn to another in the tradition, I think Danny Nabuderi, who died about 8 years ago, was very strong on financialization. And then just a few weeks ago, Emmanuel Wallerstein, who gave us such great understandings of the world system and the semi-periphery that I'm going to now turn to, because if we look at global uneven and combined development, and my first mentor, Neil Smith, my PhD supervisor, David Harvey, give me the biases that you will see now. They do follow from Luxemburg's sense that there's a perpetual overproduction in capitalism, the ceaseless flow of capital from one branch to another, and the periodical and cyclical swings of reproduction between overproduction and crisis draws in finance. How? First, you get the rising capital intensity that comes with internecine competition between capitals. That overproduction that results intensifies ruinous competition, and that leads to at least three responses, as Marx talked through the relative and absolute surplus value, right? Relative to try and make your labor more productive with more capital. And absolute, just make them work harder and longer. Luxembourg saw this also as imperialism because it was a geographical expansion, as capital sought the non-capitalist as part of its response to overproduction crises. For David Harvey, drawing in broadly spatial and temporal fixes or band-aids that capital and its managers apply to try to keep accumulation going, including outright stealing, accumulation by dispossession. So we get a problem with this capital intensity, amplifying the overproduction, with absolute surplus value drawing us towards worse forms of imperialism. And then the geopolitical tendencies to resist the devalorization that comes after you overproduce, after you overaccumulate, after you have a financial bubble. Well then, who's pushing back to make the losses go somewhere else? And it's usually coalitions of capitals, and that's the territorial feature of imperial and now sub-imperial politics. And we'll turn in a moment to the bottom-up resistances. But I think it's very important because Prabhat made a controversial argument, and I think in 2008 that was an argument that we thought sounded logical. Neoliberalism is past its sell-by date. It's exhausted. But in fact, with a new trend, let's call it deglobalization, not because of Donald Trump, not because of the trade wars, not because of Brexit, but because of an over-accumulation problem that's lasted since the 70s, that runs out of steam the way it did regularly. And all these kind of rudimentary measures of globalization, just imports to GDP, show phases of world capitalism, the 1880s and 90s, the 1930s and 40s. And if you take the McKinsey global flows, it's very clear since 2007. In fact, UNCTAD is in the new World Investment Report put this also pretty explicitly, that in all the major categories, globalization peaked in 2017. The latest McKinsey report identifies the global value chain shrinking substantially from 28% of gross output in 2007 to 22.5% in 2017. This is a period now, as the economist calls it, slowbalization. But in fact, when you look at some of the core indicators and look at the drivers of what had been that spatial fix, it's really much more dangerous. The Baltic Dry Index, the main measure of shipping, with its massive crash, which it never really recovered from, is one indicator. And you'll be surprised because next week in Brasilia, the BRICS are meeting, but they're the main forces deglobalizing. They're the ones with the greatest drop in trade to GDP ratios. And then we add into that the over-accumulation of financial capital, such as the Buffett indicator of capitalization of stock markets to GDP. And they're the U.S. is on the sugar high with its Wall Street bubble and the tax cuts, but due for a big crash. But it turns out that's relatively moderate compared to the world's worst ever over accumulation of finance in the stock market, which is in South Africa. Even last year, because Tencent, the major part of the South African market, it's now being delisted and moved to Amsterdam. It's 1/3 owned by a company in South Africa called Naspers. And even after that, we had the South African market and the Buffett indicator, Warren Buffett's capitalization of the market to GDP, as the highest ever of any country in world history. So we've got a lot of bubbling going on. Debt is just one of those sites. The latest debt figures are in the $260 trillion range. We can do the share of GDP, very, very high. South Africa's foreign debt, right up there, driving Africa's foreign debt to these levels that look like the 1980s again. Massive outflows of capital associated with major FDI, foreign direct investment by Anglo-American, by De Beers, Old Mutual, Investec, South African breweries. You like your beers from South Africa. There was a company called GenCorp. Now it's BHP Billiton. But I've just described South Africa's traditionally biggest companies as FDI. And the reason is they were allowed to run away. Nelson Mandela signed off, said, you can relist in London. So we have a really serious problem on our balance of payments with profits, dividends, and interest. And we have very few reserves. The IMF regularly finds us below the adequacy range. As I say, it's basically profits, dividends, and interests, with the current account being driven typically below 3% negative. So what's going on out there that worries me even more is a push from the main source of global capitalist crisis today, which is from China. Because after Obama gave to Trump a very, very different kind of, let's call it from neolib to paleocon sort of transition, Xi Jinping takes up corporate globalization. And this slowdown, which we haven't talked about, but I think it's terribly important, especially for the myth that African countries can continue exporting raw materials to China, and that the Belt and Road will be this new source of potential sales for the extraction process that is sped up by these new railroads and ports and so forth. This is the import decline this year into negative territory, right? And as the IMF has measured the over-accumulation of capital in China, and it's not just the IMF, we have some fantastic Chinese scholars, I can give you their details, about 1/3 over-accumulation in some of the key sectors like steel and cement, coal. So that will help explain the spatial fix, this drive outwards. Although, as Modi and Xi continue to fight over this particular strip in Kashmir, which the Indians obviously have taken over and run now like a concentration camp. Lots of other sites of geopolitical conflict, and the big problem is imperialism, right? U.S. imperialism, the need they feel to constrain China at all of these crucial points. So in that context, very quickly, overaccumulation, the paper that I've submitted here goes into all the details. I work with Chris Malakani, who at New School for Social Research did his PhD to innovate Anwar Sheikh's theories of... Yes.
You still have 5 minutes.
5 minutes. Okay, that's fine. So what we're worried about is tendencies to overaccumulate that come in waves, just like everywhere. This is quite parallel to what's happened at the world scale. The falling rate of profit in South Africa was one of the reasons that white capital split from the Afrikaners who'd been running the South African state between 1948 and 1994. They broke because of a decline in the rate of profit that led to a debt crisis in 1985. It helped that Nelson Mandela, whom I worked with, wrote the first white paper for the new South African government in his office, and his colleagues had, according to a crude version, this is from a guy called Alan Boesak, who was one of the key local community organizers, the founder of the United Democratic Front. They sold out. How did they do so? The Minister of Intelligence, Ronnie Kasrils, who was a very good friend of the Rosa Luxemburg Foundation, and I worked through 10 decisions, repaying apartheid debt, $25 billion, giving the Reserve Bank independence, taking an IMF loan in 1993, reappointing the apartheid-era key politicians in the finance ministry and the Reserve Bank joining WTO in adverse terms, dropping the corporate tax rate. It's 28 now, it was 56%. Privatizing parts of the states, demutualizing, relaxing exchange controls, raising interest rates, adopting a homegrown structural adjustment program, and as I mentioned, letting the biggest companies move to London and New York and Melbourne and Toronto. So the dynamics of capital intensity after the decline in the rate of profit then allowed through spatial fixes, temporal fixes like the ones I've just described in those empirical ways, a resurgence of accumulation, a restoration of the rate of profit, but that was only temporary, and with the peaking of the commodity supercycle in that 2011 to 15 period, then it was finished. And I can't resist by just reminding you that if you do come to South Africa, you visit us, I do hope you do, please watch your wallet. Everybody tells you, there's a name, right? Tsotsis. If you come to Johannesburg, two of my comrades here from Johannesburg will nod. But it's actually the problem in one part of Johannesburg that is most severe. Has anyone been to Sandton? It's a terrible place, Klaus, isn't it? It's the new central business district. And if you go there, watch out, because the criminals, 8 out of 10 corporate managers do crime. South Africa is a world leader in money laundering, bribery and corruption, procurement, fraud, asset misappropriation, and cybercrime. Right? Gold medalists in PwC. PwC, what is that? It's a major corporate consultancy guilty of massive criminality everywhere it operates, I would say. Bill Gates is suing them for $1 billion. So I do trust them. They know their corruption. They're a big part of it. For those from Kenya, your team from Nairobi got the silver. Anybody from France? The Parisians got the bronze. And nobody from Moscow. They got 4th place. But this is a PwC biannual survey. South Africans win the gold medal every year. Our IFFs are per capita about the highest. I'm going to race through these because, we have to give due cognizance to the racially biased character. If you are walking the streets of Sandton, the criminals you can generally identify by the color of their skin. It's like mine. And they usually have nice suits on. However, there is one man we should just acknowledge, president of the country, lawnmen, the Marikana massacre, tax dodging for lawnmen, for MTN, biggest cell phone company in Africa, through Mauritius. I mean, we could go on and on. He was unveiled in the Shanduka, in the Paradise Papers. So compared to the corporates, our bureaucrats and politicians are pretty mediocre. They rank 109th most corrupt in the world. Anyway, I just put that out because our politics have to come to grips with something that in Brazil went terribly wrong, which was an anti-corruption movement that began, and it had some good targets, Petrobras, but then it suddenly caught up Lula and Dilma in frame-ups, right? So it's a very interesting problem for this question of resistance when we're talking about these parasitical economic forces in our big central business districts. Well, we know them from long ago, but there's a new group in town who are scrambling, and they've done the most damage, in my view. They broke the United Nations, and this is Jacob Zuma with Lula, with Wen Jiabao, with Manmohan Singh, when they joined Barack Obama to do a massive destruction of Africa through climate catastrophe. So we can get into that at some point, I hope, because it's going to be integrally linked to the character, especially of migrancy, of flows of people desperate to survive in a period of worsening climate change. I'm quite worried, and I think many of our allies are, especially as Bolsonaro hosts the BRICS next week. So we have a new book about that that's come out this month from Zed. Be happy to share that with you. But this is what you're going to find next week. And I think I'll just end with this idea that there's a real necessity of revolt from Luxembourg. What's the ideology? Let's just use what Prabhat Patnaik said. The international project should be to maximize ideas, knowledge, science, hospitality, travel. These are the things that should be international. Should we add political solidarity? Let goods be homespun whenever it's reasonably and conveniently possible. Above all, let finance be primarily national. This is the globalization of people demanding the deglobalization of capital. We've got all sorts of ways to address it in places like South Africa, but I'll leave you with this image of our greatest political economist on the continent, who did call, as Prabhat did so well last night, for delinking. Later on, if there's time, we can give you really great concrete example of delinking from international pharmaceutical products, especially AIDS medicines, which have saved more lives in Africa than anything else the last 15 years, raised life expectancy in South Africa 52 to 64. Anyway, that'll take us forward. Thanks, comrades.
Thank you so much.